Everybody, John Felici, Security National Mortgage Company here. Just wanted to take a minute and say something to you guys. Had a few questions lately, and one that I get that's a very frequent question. A lot of people, they ask, can I buy a foreclosure with a regular type of loan? Well, the answer, simply put, is yes. There's nothing about any type of a loan, whether it's a conventional loan, a government loan, FHA, USDA, VA, that would prevent you from buying a home that is owned by a bank or was previously foreclosed. The problem that you run into with buying foreclosed homes is that generally speaking, the bank or the owner of the property that is foreclosed on it, which is typically going to be a bank or maybe sometimes Fannie Mae, the government, they're going to sell the home as is. Now, this is where the problem comes in for the particular loan type. There's nothing about buying a foreclosed home that's going to keep you away from doing any type of loan, government or conventional. But when you add that as-is property condition that the bank is going to require you to buy the home under, that's when you can have a problem. Because as you can imagine, when people get foreclosed on homes, I mean, I've seen a lot of different instances. People could take the cabinets out of the house. Most definitely, a lot of times people take appliances. Sometimes people get crazy. They bust windows and, I don't know, maybe they smear the baby poop on the wall or something like that. Point is, you know, if the bank's selling the home as is, whatever condition that that home was left in is what's going to have to be approved. Now, on a normal purchase where you've got a buyer and a seller and there happen to be repairs needed on the home, you know, usually the buyer and the seller can come to an agreement to fix these repairs prior to closing so that, you know, the home can be in an acceptable condition for the appraisal, for the inspections and everything like that. But then back to the foreclosure, when you're dealing with an as-is situation, the bank is, well, I say generally, I've never seen a situation where a bank is going to fix the home or even allow you to fix the home prior to closing, which creates a problem because whenever you can't do the repairs, let's just say that this home, I mean, maybe it could be something as little as the appliances are missing. So it would make sense that, you know, maybe you could just go in there and stick a cheap stove in there prior to closing and, you know, meet the requirements for the home to be livable and as is and everything like that. Well, you don't really run into many situations where a bank is going to let you do anything to a property prior to closing. It poses, you know, for one, it's a liability issue. I mean, maybe you get hurt, who knows what happens, or maybe you mess up the home worse. Point is that generally speaking, banks are not going to allow you to complete repairs prior to closing. So then what that means, nothing against buying a home that's been foreclosed or bank owned, but there is going to be a problem with property condition, and that comes down to the unique property. So if you are in the market to buy a foreclosure, maybe you want to save a little bit of money or whatever, what you want to do is you want to make sure that you have good representation going into the transaction. What I mean is a real estate agent who understands the unique requirements of the type of loan product that you're approved for, so that whatever house it is that you're looking at, if this is a foreclosure, bank-owned property, or whatever, it is possible to find the right home that can pass, you know, the appraisal inspection for the particular loan that you want to do. But once again, this is something that, you know, needs to be evaluated by a professional. And, you know, for me personally, it's very difficult to come to me and ask me if a home is going to be able to be approved prior to having an appraisal on the property. You know, the only way that I'm going to be able to tell you that is if you get an appraisal on the property, which is, you know, that's usually not something that happens before you go into contract. That's something that happens after you go into contract. Now, the other thing people ask about, 203K loans. Now, with FHA, they have, you know, numbers to identify loan products. Normal FHA purchase, a lot of people don't know this, is called a 203B loan. That's a regular FHA loan purchase, 3.5% down. So you can have that loan referred to as 203B or FHA or whatever. Now, the 203K loan is the rehab loan that FHA puts out. And, you know, how this works is, let's just give an example of a normal situation. you find a home and you're going to identify the purchase price, and you're going to get estimates from FHA approved contractors who are going to be able to say how much the repairs for this particular property are going to be. And I mean, maybe let's just use an example. Maybe it's a $100,000 house and it's going to be worth $150,000, and you need $30,000 in repair money. Well, the first part about a 203K loan that causes a lot of people issues. Well, when the normal person thinks about buying a home to rehabilitate, rehab, to fix up and live in, maybe they're going to sell it, or maybe they're going to live in it and they just want to have that extra bit of equity. I mean, most people in my experience, they want to do this as cheaply as possible. For example, maybe you've got a brother that does tile. Maybe you've got a friend that works over at the lumber yard that's going to get materials that you need, etc., etc. You're going to use your connections. Maybe you want to do some of the work yourself. Well, the problem with that is with the 203K loan. I mean, first off, the repairs that are needed are going to need to be invoiced by FHA approved people. And the repair work is not going to get done by yourself or somebody, a family friend, or somebody that you have special discounts with. I mean, everything has to be done in accordance with FHA, its requirements, and the standards that they have for the loan and inspections. And so then, let's say you do go this route, which a lot of times, the money, I would relate, I would make an analogy to the cost of doing repairs with an FHA 203K loan. It's a lot the same as paying retail price to get your home repaired at Lowe's. So with that being said, the special discounts, connections, friends, things like that, it doesn't generally work with the FHA 203K loan. But if you do find the right property, I mean, and you can identify that the repairs are not that great, and it fits within what the home is worth when the repairs are completed, it can possibly be a good loan. It's just, it goes back to the foreclosure situation, very particular. It's something that needs to be evaluated on a case-by-case basis. So then, after the repairs have been completed, the contractors are able to draw on, the money that's built into the loan to make repairs. And after everything is completed, it's going to be inspected by the appraiser again to certify that the repairs that were invoiced and accounted for or billed, that they are accounted for, everything's been repaired, and it meets FHA standards. So then, anybody out there, if you're interested in buying, foreclosed homes, if you're interested in possibly doing rehab type loans, FHA 203K, had a phone call, might not realize it, had to stop for a second. But whether you need to do a rehab loan or whether you need to buy a foreclosed home, first off, you need to be evaluated so that you make sure to qualify for the particular type of loan that you're going out for. And in the case of whether you are doing a rehab loan or whether you are doing, buying a house that's been foreclosed on, it's good to have a professional in your corner, which would be a good real estate agent. I know a few of them myself personally. I can maybe help you out if you need a recommendation. So, anyways, if you need to get a hold of me, 918-630-1991. You can always message me here. You can email me, jon.f like Frank, L-E-E-G-E @snmc.com, like Security National Mortgage Company. Get it? Okay, well, hey, everybody, you have a great day. I'm going to get back at it. Got a lot of things to do. Have a good one.